Unlocking the mechanics behind historical price extremes is the key to understanding systematic intraday expansions. By analyzing standard deviation and daily ranges, traders can shift from guessing market direction to mapping high-probability liquidity zones with mathematical precision. This quantitative approach breaks down the exact logic of the daily bias liquidity profiler, a structural framework built to evaluate market states using variance-based expansion bands. Instead of relying on static support and resistance, this system dynamically calculates the average daily range, ADR, over a trailing lookback period to establish baseline volatility. From this baseline, mathematical multipliers project structural targets, specifically the 68% and 95% probability zones, relative to the opening price. The system continuously screens historical data to track how often the previous day's high, PDH, and previous day's low, PDL, are breached, turning raw price action into a historical sweep probability metric. By processing consecutive sessions, the underlying algorithm classifies the current market state into one of three structural environments: expansion, consolidation, or reversal. When these volatility bands align with internal market inefficiencies, like a fair value gap, FVG, it creates a data-driven confluence profile that removes emotional bias from daily chart analysis. Volatility-adjusted projections learn how tracking the average daily range, ADR, creates dynamic, adaptive boundaries rather than rigid, outdated price targets. Historical sweep probabilities discover how quantifying past breaches of PDH and PDL provides a statistical look at liquidity expansion. Structural market classification understand the mathematical thresholds that differentiate true volume expansion from choppy, mean-reverting consolidation. Multi-layered confluence explore how combining variance zones with institutional order flow tools like fair value gaps filters out low-probability market noise. Warning: educational software for analytical purposes only. Trading involves significant risk.